When we asked Matt Fernley, Managing Director of Battery Metals Review and Kitco contributor, to select a standout company in the lithium space, he chose Piedmont Lithium. CEO is Keith Phillips. Keith, welcome to Kitco.
Thanks for having me. Appreciate it very much.
Keith, talk about this lithium market. Lithium's been an absolute tear. Benchmark Mineral Intelligence Lithium Index has the metal up nearly fivefold year on year.
It's really tremendous. I think a lot of us in the industry thought we would have a very strong market for a decade or so to come. I don't think we expected it to happen so fast, and maybe with such a pace. Prices are really up about 10x in about 18 months, which is staggering. But fundamentally, we have tremendous shortages of lithium chemicals that the battery and car companies need to produce all the electric cars they want to produce. These shortages are likely to last for years and years. I think well into the 2030s. So we should have prices that are for lithium products that are higher and stronger for longer.
Help me get a handle on Piedmont. Maybe break down your activities. You have North Carolina, you have Ghana, you have Quebec. There's also a new processing facility. Pardon, Keith. LHP2, location unknown. How does it all fit together?
So it's all about becoming America's biggest lithium hydroxide producer. So lithium salts, lithium carbonate, lithium hydroxide are the two kind of alternative end products that go into the battery business. Hydroxide is required for cars that want longer range. So if you want your pickup truck or your Model 3 to go 300 plus miles rather than just 200 or so miles, it's important to use more nickel in the cathode. And when you use more nickel in the cathode, you have to use lithium hydroxide rather than carbonate. So number one, we're focused on the hydroxide business. In the US, we have dramatic shortages. So globally, we have shortages. In the US, it's even worse. We produce a fraction of what we'll need. There's very little production kind of on the come for hydroxide. There are a number of carbonate projects. So we want to become the biggest hydroxide producer. All the prospective customers we talk to say the bigger we are, the more relevant we will be to them. And importantly, we want to produce all of the hydroxide from spodumene concentrate. Spodumene is a mineral that contains lithium. Most of the world's lithium chemicals come from spodumene concentrate. It's the quickest and most economical way to get to lithium hydroxide production. So we have a large spodumene concentrate opportunity in North Carolina. It's 44 million tons. It's world class. We'll produce 242,000 tons a year of spodumene concentrate. That's great. That could produce 30 or 35 or 40,000 tons of hydroxide. That's not enough for the market. So we went looking for more spodumene concentrate, and we got lucky. We had a good strategy at a lucky time. We made investments in Quebec in 2021 with Sayona Mining, and jointly with them, we acquired North American Lithium. And then we made an investment into a company called Atlantic Lithium with a big project in Ghana. These are all three of these are terrific projects. They'll actually be nearer term producers of spodumene concentrate than we will be in North Carolina. And in total, we'll have over 500,000 tons of spodumene concentrate that we either own or control via offtake agreements. That's a big number. That'll allow us to produce probably 75,000 tons of lithium hydroxide, which would be by far the biggest in North America. Again, total capacity in North America today is 15,000 tons. If you add up everything else people are talking about doing, we would be still by far the biggest. LHP2 comes into play because Carolina Lithium is an integrated project, spodumene concentrate to hydroxide. We need to build a second chemical plant to process the material, particularly from Ghana. That material will come directly into, we think, the Carolinas and go to our second chemical plant site. That site will be announced, we hope, this quarter by the end of June. We're looking at a few really interesting sites, principally in North and South Carolina, with good access to port, good access to power and gas, rail, and close to our headquarters and close to our customer base. So it's all about becoming a large lithium hydroxide producer based on spodumene concentrate that we control. And that's how all the assets fit together.
Well, it's really been a marked contrast. We're Kitco, we cover gold. There's really been limited M&A, just given what gold price has been doing. But when I've looked at what's happened in the battery metal space, it's just been pedal to the metal. I look at all the deals that Ganfeng did, Sibanye, Lithium Americas, yourself as well too. Your customers are just telling you they just want to see scale.
Yeah, scale matters. I mean, the customers are big companies. So you think about the big car companies, obviously big. The big battery companies are frankly bigger than most of the car companies by a market cap perspective. And the largest battery companies, they're the Chinese, they're the big Koreans, there's Panasonic, and there's some newer companies, Northvolt, et cetera, aspiring to become a large battery producer. These are big companies with big requirements. They'd like to have 2 or 3 or 4 good suppliers they can rely on. It's really going to be difficult for them if they have to manage 6 or 8 or 15 or 20 lithium suppliers. So consolidation is important from that perspective. And there are really 3 drivers. One is the bigger guys with teams that know how to do this getting bigger. So Albemarle acquired Wodgina, Pilbara acquired Altura. We made 3 investments in strategic assets where we think we can bring value to those teams. Importantly is the Chinese really in a scramble for raw materials. This is one of these businesses where the Chinese dominate the lithium chemical market, certainly the lithium hydroxide market, but they are mostly converters. They don't own their own raw material for the most part. So they're exposed to upstream raw material prices. They're doing all they can to acquire stakes or full ownership in assets around the world in countries that will let them in. Countries in Africa like Mali and the DRC, Zimbabwe, South America, or Latin America, Argentina and Mexico. It's difficult for them to invest in the United States, difficult for them to invest in Canada or Australia right now. So they're scrambling to get whatever assets they can control so they control their own destiny to some extent. And then importantly, you have these new entries. It's great to see people like Sibanye-Stillwater or Rio Tinto or Wesfarmers in Australia, large companies making initial investments in the lithium business, just sort of looking at the fundamentals. The whole global economy is electrifying. With electrification, you need batteries. Batteries need lithium. It's the irreplaceable element of the electric era. You can't build lithium-ion batteries without lithium. You can substitute all the other components for the most part. You can't substitute lithium. So it's. I think we're just really in the second or third inning of this bull market. I think it's going to be a really strong market for until we get to equilibrium, which I think is 15 or 20 years away. By the time supply really catches up to demand that's rampant right now.
Let's start with your North Carolina project, talking about the individual pieces at Piedmont. I believe that you're working through the permitting right now before you make a final investment decision, Keith.
Yeah, it's a big project. So there's several steps to the process. We've received our federal water permit. We got that in 2019. That's great. We've applied for our state mining permit last August. We hope to that project culminates in a permitting award this summer. We need some other water permits, stormwater, et cetera. We need an air permit, a Title V air permit. It's a process that takes time. We're also somewhat uniquely operating on private land that we own, as opposed to operating in, say, Western Australia or Quebec or Nevada, where you're working on government land and you essentially pay royalties to acquire that. We're acquiring our land. We're going to invest 40 or 50 million in total in this land. And the land is principally zoned residential. We need to have it rezoned for industrial purposes and for mining purposes. And that's a process that will go on as well. It's going to take time. We think it's going well. Fundamentally, this is a tremendous project. It's a state of the art from a mining perspective. We think it'll be the cleanest lithium project in the world. And it's importantly an important economic investment in our community. It's around $1 billion of capital, probably the biggest industrial project ever in Gaston County. And we're confident we'll get through that in due course, but you can't kind of push on a string, so to say, with the permitting process. It takes the time it takes.
Now, in November, Reuters said relations with the North Carolina County Commissioners in Piedmont were, quote, strained. Are you going to be getting local support for the project, Keith?
Yeah, we think so. There's very broad support locally. There's 220,000 people live in Gaston County. It's a kind of pro-business county. It really needs big industrial investment like this, big commercial investment like this. I think most of the folks in the community see that. We're confident we'll get that support. I think it's important for us to get through some permitting stages to show that we've successfully received, say, the mine permit. It's a very rigorous process. It answers a lot of the questions people understandably have about water, about blasting, about noise, about dust, about traffic. These are all legitimate questions. We have good answers. We're working through that process. I think once we receive that, I think that'll give commissioners and others in the community just more confidence that a thorough job has been done vetting our project. It's not just us; it's the regulators, and we think that'll be a real catalyst to broader support.
Talk about those lower emissions, Keith. Yourself and a lot of the other lithium producers, lithium miners are talking about lowering emissions. Obviously, very important to the electric vehicle manufacturers.
Yeah, it's great. You're right. It's critical to the car companies, critical to the battery companies, critical to institutional investors these days. It's really fundamentally a critically important part of our business. We're very focused on it, have been for some time. So we break kind of environmental issues into three buckets. There's carbon footprint, emissions. There's land footprint, and there's water footprint. So let me talk about land and water first, because sort of some fun facts. 30 or 40% of the world's lithium comes from the Atacama Desert, Chile and Argentina, where principally brine and the salt in the brine is lithium. Brine is pumped from the aquifer to surface to massive evaporation ponds and evaporated. And relative to Piedmont, SQM in Chile, for instance, we use 77 times more land per ton of lithium hydroxide production than we'll need. So dramatically larger land impact. They'll also use 20 times more water per ton of production than we'll use, and they're using it in the world's driest desert. North Carolina, Ghana, Quebec, where we are fortunate to have abundant, clean, fresh water, very affordable, clean, abundant, very different from the Atacama, from Western Australia, from Nevada, frankly. Big advantage for us. From a carbon perspective, we've worked really hard to have, we think, by far the cleanest profile from an emissions perspective for a spodumene project. So the brine projects in South America have one big advantage, which is they use solar evaporation in these huge ponds to essentially recover the lithium salts. And that's very efficient from an environmental perspective. It's hard to compete with that from a carbon perspective. But relative to existing incumbent spodumene production today, which is essentially all in Australia, essentially all the concentrates mined in Australia, put on trucks to the coast, shipped into China 5,000 miles away, and then sometimes 1,000 miles into a place like Chengdu by truck and barge and train. Huge carbon impact of that process, which we avoid. We're going to do everything on one site. Our site in Carolina Lithium will be the only site in the world with a mine, concentrate plant, chemical plant, all on one site, connected by electric conveyors. So it's one thing we've really worked hard on, is to get everything on one site, use electric conveyors to reduce our truck fleet, to reduce diesel emissions. And it's had a big impact. And statistically, from when you include scope 1, 2, and 3 emissions, we'll have, we think by far the cleanest profile of any spodumene to hydroxide producer globally.
Let's talk about your partner, Atlantic Lithium. They announced a 42% increase in a mineral resource at its Ewoyaa project. What would you like to highlight?
It's a great project. And you mentioned Matt Fernley early on. I'll give Matt a shout out. Matt is the one that first put me onto this project. We used to include in our corporate presentation sort of a map of the world with all the key spodumene projects. He called me a year and a half ago just to highlight one we were missing. He was onto what it was then called Iron Ridge Resources pretty early. It is a wonderful project. It's very prospective geologically. So we're now at a 30 million ton mineral resource. They're still drilling with 5 or 6 rigs. They have 420 square kilometers of exploration targets. This could get really big. It's already big. 30 million tons is a lot. It'll produce 300,000 tons a year for probably, with the next study update, 12 or 13 or 14 years. We think it'll get longer still. It's exceptionally well located. It's a mile from the Atlantic Ocean. So it's a mile from the Atlantic Ocean and a mile from the national highway in Ghana. 70 miles to the west is the Takoradi port, which is a very large port, easy to ship from there directly into the Carolinas or directly into Quebec on the seaway. We actually think we can get material from Ghana to our North Carolina area region for less from a transport cost perspective than we could from northern Quebec or northern Ontario or somewhere like that. It's really very efficient, so that's great. It should be relatively easy to build, ramp up, and process. It'll be dense medium separation only. It's coarse spodumene crystals, really amenable to DMS processing. So lower CapEx, lower OpEx, should be very economic. And we're earning a 50% interest in the project with our partner, Atlantic Lithium. And we're very excited to be involved.
macro questions for you, Keith. If prices stay high on a limited supply with high demand, could that hurt energy transition and wider adoption? Is the industry going to be able to innovate to kind of meet the demand for battery metals?
I think in the medium term, if prices stay at current levels for a decade, it could have an impact. I think what most car companies are focused on right now, understandably, with a couple exceptions like say Tesla, most of the folks are really just now starting to produce electric vehicles at scale. And when I say now, they're really 2 or 3 years away from producing at sufficient scale to meet demand. So if you want to order a Ford F-150 Lightning right now, I think it's at least a year before you can get it. Same for most vehicles that are out there. And these tend to be higher end, more expensive vehicles where demand is dramatically larger than supply will be for a year or 2 or 3. And I don't think demand is particularly price elastic. So if a high end, I don't know what the price point is for the F-150 Lightning, but my guess is the higher end versions are $80,000, $90,000, $100,000. If lithium prices require, from a cost perspective, another $1,000 or $2,000 in price for the battery and car companies to kind of make that work, I think the market can digest it pretty easily, at least for several years, until we get really into the mass market vehicles. The other thing I would point out is the battery companies and car companies are making such really significant improvements in their operations just because this is a new business. The first battery gigafactory was built in Nevada by Panasonic and Tesla 4 or 5 years ago. There are now, I think, 168 or 185 or some silly number around the world that are under development in China, in Asia, in Europe, and now importantly in the US. There's been huge investment announced in the US by the big car companies, the big battery companies. These are plants built at a scale unlike what we've seen in the past. They'll produce at lower cost from a manufacturing perspective than ever before. And I think and the technology, the shaping, the engineering around the battery pack is improving at every company. So I think there's room for the battery cells to accommodate higher commodity prices. And unfortunately, I don't really think there's an alternative.
What you hear often analysts talking about the space is that the automakers are just finally becoming aware of what the mining industry is. I mean, you hear the record times that Tesla is able to put up a gigafactory, for example. But if you're hitting a mine, I mean, you're talking about 8 years, a decade that you're actually going to be able to get something doing. We are just constrained this way. If you're actually going to build out that capacity, it just takes a long time to build a mine, Keith.
It does, and there's really no shortcut. I mean, other than using, say, a brownfield expansion. So those will happen. Greenbushes in Australia, Pilbara in Australia. You'll see existing projects, the Atacama brines, to the extent they can politically and they have the resource. There'll be brownfield expansions. That'll just scratch the surface on what's going to be required, but those will be important. But when you're starting with a greenfield site, I mean, the process. You got to decide, first of all, where are you going to go? You're going to go to Quebec. You're going to go to Western Australia. You're going to try to go to North Carolina. You have to put together a suitable land package. You have to do, geological work, metallurgical work, engineering work, just to get to the point where you think you have something that might work. That takes 3, 4, 5 years, best case. You then have to permit it, fund it, build it, ramp it up, commission it, ramp it up. It's a process. Our company was founded 6 years ago, actually right around this month, April 2016. So we're in year 6. We hope to be in production in North Carolina, Carolina Lithium in 2 or 3 years. That's warp speed. It's really, we're in a great place to do it. We're doing it as fast as we can. We did slow down a little bit for a year or so when we had a bear market a couple of years ago, but you really can't do it any faster than we're doing it. And permitting, while there's a lot of kind of noise around our permitting process, we think it'll be meaningfully more streamlined than it might be in Quebec or Nevada or somewhere else. The reality is it'll be really difficult to bring new capacity online. There will undoubtedly be some great discoveries in different parts of the world. And there is enough lithium in the Earth's crust to comfortably support 100% EV adoption, but we're not going to get there till the 2040s from a raw material perspective.
Lastly, Keith, what are some milestones at Piedmont you want to highlight over the next 12 months?
It's going to be a busy year, a lot going on. We have 4 core projects now. So first thing will be in Quebec, where we're partnered with Sayona Mining. And Sayona Quebec, the joint venture we have, has by far the biggest lithium resource in Canada, and it's the best located, being near Val-d'Or, and it's the nearest term. The North American Lithium Project was built 8 or 10 years ago. It's operated off and on. So we should have a feasibility study on that the restart of North American Lithium in the next 30 days or so, and FID will follow after. So we hope to be in production, spodumene concentrate production at NAL in the first half of next year. So near-term production is really important in a market like this, obviously. In Ghana, we think Ghana is about a year behind. So Ewoyaa should have there's again 5 or 6 rigs drilling. There'll be more exploration updates. There should be a pre-feasibility study maybe by June this year, and hopefully DFS and FID there early next year. It should be a 9 to 12 month construction process. Should be in production in 2024. LHP2, which is misnamed, it probably should be LHP1 because it'll almost certainly be built before Carolina Lithium, is our second chemical plant. We're looking at sites. We've got a short list. They each offer pros and cons. We're going to make a smart decision, and we hope to announce that by June. So that's a catalyst. We'll have a definitive feasibility study very rapidly because it'll be a twin to the chemical plant we just did a DFS on at Carolina Lithium. And we should have a construction decision. We think we'll be permitted this year and have a construction decision kind of early next year on LHP2. And then more broadly on Carolina Lithium and strategic, we are, as we've announced, we are working with a couple of advisors on a strategic partnering process. These are big capital projects, $1 billion at Carolina Lithium, $600 million at LHP2. We think there are people in the supply chain and people outside of the business who are interested in controlling their own destiny in the lithium sector. We're talking to a number of them, car companies, battery companies, mining companies, oil companies, et cetera. And we hope to have an announcement along those lines over the next several months, which I think could be a real catalyst for the stock.
Keith, we'll get out of your hair and we'll let you get on with your numbering. Keith, thanks for talking about Piedmont with Kitco.
Thanks so much for having me. Really appreciate it.
He's Keith Phillips. He's CEO of Piedmont Lithium. My name is Michael McRae, and you're watching Kitco Mining.